Hi everyone, welcome to the Fifth Person video training series. My name is Rusmin and I'm the co-founder of the Fifth Person. A lot of investors want to invest in REITs, but they don't really know how they work. So in this video, I'm going to share with you why Singapore REITs is one of the best instruments to have in a portfolio if you want to receive a very steady stream of passive income in years to come. Also in this video, I'm going to share with you the REITs structure so that you get a full picture of the REITs business model. Okay, and after this video, you're going to learn how the REITs work and you can decide whether REITs can be suitable for you as an investment option. Okay, so if you're ready, let's go. We all know that investing in property in Singapore can be very expensive. For one unit with 1,000 square feet for a government project, it can easily cost $400,000 to as high as 1 million Singapore dollars. Okay, so for private residential, it can easily cost about 1 million to about 3 million with the same size. Alright, so Singapore property prices are very expensive, and if you have a lot of capital, you can definitely invest in Singapore. If not, that doesn't mean that you can't invest in Singapore. In fact, you can invest in Singapore property through this thing called Real Estate Investment Trust. Okay, so this is what you usually call as REIT. So REITs is basically a trust that is actually being created that allows a pool of people to actually pool their money together, and with bigger pool of money, and this money can actually be being used to buy commercial assets like malls, hospitals, industrial, office, and so on and so forth. Okay, so if you pool the money together as a group, you can buy bigger property as compared you coming on the money, everything by yourself. You can only buy one residential or two or three. Okay, so the first and the most obvious reasons why invest in Singapore REITs is, of course, the startup capital. Okay, so for REITs, the startup capital is very low as compared to a physical property. For REITs, it's traded like a stocks, and you know stocks at a few $100s or few $1,000s, you can actually start investing in the stock market. Okay, so you no need to have few $100,000 to actually invest in a REIT. Okay, so that's the beauty of that. And second reasons why REITs is attractive is of course the liquidity. Okay, so REITs are again traded like a stock, and every day there are people who are buying and selling this particular REITs. Okay, and that actually created a lot of liquidity versus if you were to buy a physical property, it may take you a long time to actually buy or sell that property. But for REITs, you can actually clear it within a single day. Okay, so there are millions of dollars of transactions are being transacted every single day, and REITs is actually considered a very liquid investment in Singapore. So let's look at it. For example, Capital Land Mall Trust. Okay, so this is the very first REIT that's ever listed here in Singapore back in 2002. As of I record this video, Capital Land Mall Trust share price is trading at about $2. That means that you need $200 to invest in Capital Land Mall Trust, because that is going to give you about 100 shares equivalent to one lot. Okay, so if you have $1,000, $2,000, you can actually start to invest in Capital Land Mall Trust. Okay, if you have a bigger quantum, let's say $100,000, that shouldn't be a problem. You can also invest in Capital Land Mall Trust, because every day Capital Land Mall Trust, the liquidity is very high, and you can see that a few $100,000 are being transacted every day, and sometimes can go up to as high as few $1 million every day being transacted. Okay, so it is very liquid in terms of liquidity, and of course it also gives you a very good diversification for REITs here in Singapore. So the same REITs can actually have a portfolio of 10 properties, 30 properties in different sectors. But whereas if you were to buy physical property, one or two, your REITs are concentrated in certain area. Okay, so for REITs, it's actually pretty much diversified. So if you were to use back the same example, Capital Land Mall Trust, they have about 16 shopping malls, and they have close to 3,100 tenants. And this is a very well diversified. Okay, so their malls are spread across the Singapore Island. You have Plaza Singapura, Lot 1, you have Bishan Junction A, you also have Tampines. So these are very diversified as compared to you having one single property and also one single tenant. Okay, so this diversity, of course, will reduce our investment risk, because one day Capital Land Mall Trust may lose some of the tenants, 10, 20 tenants, but that is not going to affect the entire income of the portfolio. But if you were to invest in just one single or two physical property, and if two of your tenants default on the payment, that's going to affect your income significantly. Okay, so that is the main difference of investing in the REITs versus investing in physical property. And of course, investing in physical property does have its pros because you can invest in those physical property, and at the same time you can stay in the physical property because it belongs to you. But whereas if you were to invest in the REITs, okay, you are actually shared with a group of people or pool of people. You can't just literally sleep in the shopping malls or in a hospital, okay, because this is hold by a trust, is not owned by you. Of course, technically, you still have a fair share of profit from this rental. Another huge benefits of investing in Singapore REITs is, of course, the tax. Okay, so if you were to invest in physical property, we all know that we are subject to tax. We need to pay income tax for the rental income that we collected. Okay, so the size of the percentage really depends on the investment property, but it can go up to as high as 20%. Okay, whereas for REITs, government stated that if the REITs manager distributed more than 90% of their taxable income, they are actually exempted from paying the tax. Okay, so Singapore Budget 2005 have actually extended these benefits to another 5 years. So the next renewal will be coming into 2020. But basically, for REITs now in Singapore are actually exempted from tax. Okay, meaning to say that the rental income collected by the REITs manager will then be distributed back to the unit holders. And those are actually tax-free if they pay out 90% of those distributable income. Okay, so REITs has a huge benefits on this. But on the other hand, if you were to invest in Singapore stocks, okay, government have also stated that, if you were to buy or sell share and you make profit or losses, you don't have to pay any single tax unless you are under the corporate structure. Okay, so personally, you don't really have to pay any single tax in Singapore for investment in equity. And because of the tax efficient structure that REITs are enjoying, okay, if you look at the yield across all the REITs in Singapore, they generally enjoy a better yield as compared to other investment instruments. Okay, so let's take a look here. If we were to compare with other instruments like Singapore government bond 10 years, it's actually currently giving us about less than 3%, whereas for CPF ordinary interest rate is about 2.5% and fixed deposit is less than 1%. Of course, these investments are more or less likely to be risk-free, okay, but if you were to venture out into properties, the REITs in Singapore can easily give us about 5% to as high as 9%. Okay, so on average it's about 7%, and this is pretty common here in Singapore, and this is also one of the main reasons why we are very interested in REITs. Okay, the yield itself is very attractive. Okay, so if you were to compare this yield with private residential property market here in Singapore, you can probably get about 2.5% to 3%. Okay, so REITs can double that, okay, that amount. Okay, so this is very attractive. All right, of course, the most last benefits that I get to see for investing in REITs is, of course, hassle-free. Okay, and I like hassle-free investment, but I don't have to go and manage. I don't have to oversee it, so it frees up a lot of my time, which I can do other things. Okay, so if you were to invest in physical property, again, you have to collect a rental. Of course, you can get an agent to help you to do that. And you have to manage tenant expectations. You have to negotiate the rent, and you have to fix the light bulb if they spoil. And okay, there are many other things that you need to do to make sure that your tenants stay with you or renew your rental. Okay, sometimes you have the tenants actually defaulted on your payment, so there's a lot of issues that you need to handle if you were to manage this physical property. But for REITs, the structure is being set up very differently. REITs is a very professionally set up trust, and unit holders, which people like us, we pull the money together and then we bring it to the trust, and the trust will engage the professional REIT manager. Okay, so these are the people who provide the brains, and they have an investment experience in real estate, and they know how to buy and when to sell certain types of properties. Okay, so these are the manager who will be running the day-to-day operation and also setting the strategic directions of the REITs, and they will come in to provide their services to this trust, and of course the trust in return will pay them a manager fees. Okay, and of course their main challenge with running a REITs, of course, they have to focus on growing the REITs, how to maximize the distribution per unit for the unit holders, and they usually leave the day-to-day operations to the property managers, where the REITs will then hire property managers to run day-to-day operations. So meaning to say that if you got light bulb spoil, the property manager will call the contractor to come down and fix the light bulb, or if you have toilet, you have internet issue and stuff like that. So property managers are the one that's handling that. Okay, so at the end of the day, the property managers have to make sure that the property's operations are run perfectly and smoothly, while the risk manager will make sure that they will continue to buy good properties that can be yield accretive for the unit holders. Okay, so their job is to make sure that REITs perform and then return this rental income back to the unit holders in the form of the distributions. Okay, so of course you have a trustee who is there to safeguard the interests of unit holders, make sure that whatever risk managers are doing is everything accounted and it's black and white. Okay, so unit holders, at the end of the day, you will receive your distributions every 3 months. So for REITs in Singapore, most of the REITs here pay every 3 months dividends. So if you have a REITs that's giving you a 6% yield, meaning to say that 1.5% will be paid out every 3 months. Okay, so this is how the property structure or the REIT structure that's being set up here in Singapore. So it's an externally managed REIT. And as you can see from this structure, you as a unit holders, you just have to enjoy your dividends. You just have to make sure that your dividends are collected, are banking into your bank account every 3 months, and that's it. Okay, the rest of the issue are handled by these professional managers. Okay, so that is the beauty of REITs. It has a high yield, it is hassle-free. Okay, you don't have to micromanage them, and these people will run their day-to-day operation and deliver the result back to you. As you can see, there are many reasons why you should invest in REITs if you want to build passive income that's going to pay you for life. And this is especially important if you still want to receive cash flow during your retirement years. Okay, and best of all, the dividends you receive in Singapore are all free from taxation. Okay, and now I have a bonus for you, and we have actually compiled a list of Singapore REITs that have been paying higher distribution per unit over the last 5 years, meaning to say that anyone invested in these REITs, they have been actually getting a higher payout year after year. Okay, you can find this download link in the descriptions box below. And if you like this video, remember to hit the like button and share it with your friends, and be sure to subscribe to our channel. Okay, and in our next video, I'm going to share with you 5 important metrics when it comes to analyzing a REIT, and this is going to help you to filter out a good REITs and the bad REITs. Okay, and thanks for watching. I'll see you in the next video.